It's hard to imagine an event that would define the careers of procurement and supply chain professionals worldwide more than a global pandemic. Yet at the start of the decade, that's exactly what we have. The coronavirus has brought not just our supply chains, but our world as we know it to a grinding halt. Yet from the perspective of the C-suite and our shareholders, business must go on, and we're the ones responsible for making sure it happens. So we want to help you crowdsource confidence during the coronavirus crisis. Procurious COVID-19 supply chain crisis webinars have been designed to give you the emotional and the technical support you need while the chips are down. However, today's conversation is going to be a little less upbeat than some of our previous conversations. Today, we want to take a walk on the dark side. We want to update you on some of the nefarious commercial activities that are taking place right now. But really, they've been happening since the beginning of time. After all, where there is a will, there's a way. But first, let me introduce today's speaker. Danny Thompson is joining us from Apex Analytics. Danny is the Senior Vice President of Market and Product Strategy and is responsible for defining and communicating the company's software product strategy roadmap. He works closely with Apex customers to ensure that each solution helps them meet their business objectives. He is a former global process driver for Invoice to Pay at Pfizer. Gerard leads the global category procurement for both direct and indirect procurement for over $1 billion in annual addressable spend across 90-plus sites in 25 countries. Previously, he spent 9 years at AstraZeneca in various leadership roles, including Global Head of Procurement for R&D, Category Lead for Facilities and Labs, Senior Director for all MedImmune indirect categories, and Procurement Operations and Resource Planning Lead, delivering internal consulting and project leadership for R&D procurement. Gerard has over 30 years global supply chain experience with almost 25 years in procurement. Amy Fong is Vice President in Everest Group's Strategic Outsourcing and Vendor Management Practice. Amy has more than 20 years of experience in industry consulting and advising with a focus on procurement, supply chain, and organizational effectiveness. She has authored numerous publications and speaks frequently on source-to-pay process improvement and managing complex supply chain partnerships. Prior to joining Everest Group, she was a senior advisor and program leader with the Hackett Group's procurement advisory program. So let's get started with the real now issue, fake goods in the EU. Counterfeit pharmaceuticals and healthcare products are everywhere, according to Europol, the European Union's law enforcement agency. In a recent report, it listed the most worrying fake items that they've uncovered. Medical equipment, including face masks, virus test kits, gloves, disinfectants such as alcohol-based hand sanitizer and cleaning wipes, and medicine, of course, the anti-malaria drug that everyone is hoping will beat coronavirus, and other fake cures. Europol says the fake goods are sold through online stores created just to profit from the pandemic. Some even target victims through messaging apps like Telegram. The goods originate from frequently changing addresses in Asia, making it extremely difficult to trace. Europol is concerned these inferior goods could put people at serious risk. Gerard, I'd like to bring you into the conversation first. Are you aware of this fakes issue, and what are your thoughts?
Well, I am very much aware of this issue. While I haven't seen some of the things that are impacting the consumer market, such as fake drugs, but in the pharmaceutical research and development space, we've seen a plethora of fake PPE, sanitizers, face masks. These are coming from suppliers, like you said, that have popped up out of nowhere, offering to fill gaps in the supply chain. These suppliers are generally come from outside the research and development industry, like promotional industries, or factories of unknown source. They're charging anywhere from 10x to 20x what the previous pricing in the market was for these very common items, like I said, gloves, sanitizers, face masks, and they're most frequently demanding upfront wire transfers even before the material leaves China, much less releasing it from their warehouses within the region. So this has been a rapidly growing problem brought on by the challenges of COVID.
Just so unbelievable to think that, these sort of bad actors will be mobilizing during such a time and taking advantage of the situation. But Danny, what are the types of fraud businesses can be prey to at any time? I guess it's not just the pandemic when these people take advantage, but, in the normal course of business.
Yeah, there are a wide range of fraudulent activities that large companies can be subject to, and two of the top ones are payment tampering and procurement fraud. And when I talk about payment tampering, these range from like phishing and spoofing attacks that attempt to trick companies into issuing payments to fraudulent bank accounts. That also include things like business email compromise, which is a recent rise in fraud where hackers actually hack into a supplier's email account and send emails from the supplier's legitimate email account to their customers to get bank accounts changed. So those are examples of payment tampering. And then procurement fraud, that's just the normal type of collusion or invoice approval type fraud where insiders work alone or with outsiders to get payments made for purchases that never really happened.
Amy, what about you? Do you worry about fraud now, and what particular types of fraud do you think we're particularly susceptible to at this point in time?
Yeah, I think we all need to be particularly on guard right now. Early in the COVID crisis, from the consumer perspective, we saw some things like, scams and spam. We saw fake tracker sites early on that were installing malware. They looked exactly like the Johns Hopkins site that a lot of us rely on. And I can tell you, I had trouble telling the difference at first. Had to do a little research to find the safer sites. There have been calls to elderly. They're already scared. And, we've seen quite a bit in the U.S., people trying to take advantage of that and get money out of this. Generally, things tend to happen when people get desperate as well. So we're at risk for that. Some of the things I see, in the services space, and I think with all suppliers and even internally, is just the loosening of MSAs or policies with your providers or internally that can open us up to cybercrime. I almost hate to say that out loud because you don't want to give away any secrets, right? But in general, things are in an exception mode right now, and when you're working in exceptions, and in some cases people were not digitally prepared to make the shift, I think there's new gaps for anyone nefarious to slip into.
Gerard, what about your time at AstraZeneca? I'm just trying to compare, now to previously and then maybe ongoing. In previous companies, and now you're at Charles River Laboratories, is the fight against payments fraud real?
Absolutely. And I want to parrot some of what Danny and Amy said, in that COVID has really created a perfect storm for fraud. We're in a crisis management mode where supply chains have been disrupted and business critical goods and services have to be sourced. And the supply chain, because of the disruption, we have to find new sources. This is where the fraudsters come in. And I would bucket them into maybe two segments. One that you wouldn't ordinarily think, which is disrupted supply chains, dramatic swings in demand in the market have taken suppliers that were already marginally financially successful and have pushed them over the edge. So they're starting to demand upfront payments or booking of orders over a long period of time. We had one supplier specifically that was always on the standard payment terms, demanded upfront payments before they delivered goods. They were direct materials. We refused, and 2 weeks later, they closed their doors for bankruptcy. So they were looking to get cash in the door. The other bucket is what we think of as the fraudsters, right? These pop-up suppliers that are looking to get payments upfront for either fake goods or services that will never be rendered, or rendered in a shoddy, non-compliant way so that they're not useful. And I've seen financial audit reports and payment terms demanded by suppliers that would literally make your hair curl.
And when you look at some of the data, you know, the impact of fraud on today's businesses are absolutely staggering. I was looking at the Association of Certified Fraud Examiners, and they estimate almost 5% of revenues are lost to fraud annually. And I think, Danny, Apex Analytics analysis of that data shows that an estimated $750 billion a year is lost to schemes that involve check and payment tampering, and another $833 billion to billing fraud. So nowhere is the risk greater than in the procure-to-pay cycle, which probably represents, as we all know, the largest annual outlay for most companies. So I think a lot of the experts are saying that it's internal control weaknesses that are responsible for almost half the frauds. And as you have all said already, you know, fraudsters simply follow the money or opportunity. So, and unfortunately, though, some of these are trusted employees who are familiar with the internal financial controls and know how to fly beneath the radar. Amy, do you have any examples from your experience of people or companies taking advantage of the system?
I do. I've seen quite a few different scenarios. Not too many, but they do pop up, I guess. You know, one of the clients I used to work with for quite a while, we met with some questions about P card controls, and they didn't admit it at the time, but I learned soon after that they had a situation with a senior exec's admin who was buying things for personal use, and the admin was just kind of rubber stamping the approvals in huge amounts, 6 figures in gift cards to department stores and restaurants and things that just shouldn't have even gotten through the basic controls. Now, the positive is that they caught it. They caught it too late, but they did catch it and dealt with that. But you know, you have some senior people that are just kind of asleep at the wheel and no automation to control it or to stop it or to send a flag. I've seen AP examples as well where people have set up fake suppliers, or their friends are the supplier, or you know, all kinds of things that are not quite okay from a payments perspective. Those are less common now, and we can talk about more technology side, but they definitely still pop up, and I think a lot of people have learned their lesson the hard way, but probably not enough.
Danny, in your introduction, you sort of touched on a couple of these, but I was reading one of your white papers and they characterized 3 types of fraud. Just for our listeners, you know, who are always keen to be educated, what are the 3 main buckets of fraud as you see them?
So we think about fraud in 3 categories. One is insider scams, 2, hacker scams, and then 3, just errors made during times of system and process upheaval. And the insider scams, you know, we've talked about a few of them already, but 2 of the most common ones are kickbacks and fraudulent purchases. And if you think about a kickback, that tends to happen in a case most commonly when a supplier is being paid with a check and the person who made the purchase wants to hand deliver that check to the supplier. This one's been around for a long time, and it just creates a circumstance when that check is being handed off that perhaps puts pressure on the supplier to provide something in return, and often that's a portion of the payment. But other sorts of fraudulent purchases, we found one of our clients discovered when they acquired another company that one of their employees had committed over $40 million in fraud by setting up a fake supplier and sending through invoice after invoice that was right below that individual's approval level. And that continued all the way until the company that insider was working for got bought out by our client, whose controls then kicked in and uncovered the fraud. And so those are cases of insider fraud. Hacker scams are the ones that I talked about before, the phishing and the spoofing and taking over a supplier's legitimate email account, or maybe even taking over the supplier's online account to update bank accounts and get payments routed to the hacker rather than the individual who's supposed to be paid. And then the system and process upheavals happen when there's some sort of major change going on in an organization, like maybe they're moving to a new ERP, or they're outsourcing their AP processes, or there's a situation like we have today with our current crisis where the normal controls aren't in place, or maybe the key control personnel are out of pocket, and the backup resources or backup controls just don't get the job done. Fraudsters know to strike at times like that, and that's what they do. They take advantage.
Gerard, in your experience, what are the signs that your organization could be a victim of fraud?
Well, from a 10,000-foot perspective, if there's an opportunity for fraud, your company will be defrauded. And even before you get into some of the more tactical indicators, which I'm sure the panel can speak to, from my perspective, the first thing I look for is the lack of controls or policies that are in place, or enforcement of lack of enforcement of policies that are already in place. There's rarely a strong source to settle process that includes tenders. Generally, that's because of, there isn't any time to do a tender. It's always last minute. Lack of control over the new vendor setup process. So who owns that approval of a new vendor, and who owns the vendor master file? What the data that goes into that vendor master file, like bank account numbers, ACH numbers. Decentralized procurement and finance functions that report to the site or to the business and don't have a single tower of autonomy, if you will. And last but not least, I like to use the term executive prerogative. When you get senior leaders who are empowered to say, it's my budget, it's my supplier, and I'm okay with the price, why do you care? Those are very strong indicators for me that there's probably pervasive fraud issues throughout the company.
Yes, that executive prerogative, it can be powerful, but it can also be dangerous. You want to empower people, but what we're learning today is, this can have a downside. Danny, you're obviously at the front, the coalface for a lot of these issues. Is there anything that you would add to Gerard's list, anything that our listeners should be on the lookout for?
Well, I think one thing that's important for every company to take an action they should take is bump their employee bank accounts and addresses against their vendor base. Now, there are cases where payments would go to an employee or to maybe an employee's spouse, but there are also plenty of cases where those indicate fraud. So look for those. There are also some patterns that are indicative of fraud, like consecutive invoice numbering. If a supplier's invoices are always invoice number one more than they were last month, it suggests maybe you're their only customer, which is unlikely. It might also indicate fraud is underway. Or if you see a change in the payment pattern over time, so a bunch of small payments and then a really large payment. And then one last one I'll mention is you should have thresholds for additional reviews of invoices, maybe thresholds for a second approver. But every once in a while, you should do some analysis to look for suppliers who are getting a lot of payments just below the threshold. Those could be some indicators of fraud as well.
I mean, from the outside, those all sound very logical, but I think when you start to think of the volume of transactions, tens of thousands of suppliers, hundreds of thousands of payments, you begin to understand how important technology is to identify some of these issues. But, we'll move on to that. I guess, Gerard, I wanted to ask you a question because some of my research showed that accounting, our accountant friends, our finance business partners, if you like, is actually the home to more occupational fraudsters than any other corporate function. And that really captured my interest because I'm actually married to an accountant, but I would hope that I can trust him. But, I guess it's what we talked about earlier, these are the people who know our company processes, the controls, and also, unfortunately, therefore know how to work around them. So, Gerard, in your experience, are our friends in accounting top of the suspect list for fraud?
Yeah, unfortunately, they are. I'm going to give you a little tangential answer before I answer your question directly, in that, there are specific types of folks that tend to commit fraud. They tend to be, and I raise my hand, a middle-aged men. They have financial issues. They tend to have drug problems, maybe going through a divorce. So not only where to look for, what functions to look for potential fraudsters, but the profile of a fraudster, I think, helps as well. Now, once within, while talking about our friends in accounting, we've done so many things to improve our efficiency and effectiveness and reduce admin burden, but it also opens us up to fraud. So things like touchless ordering, thresholds for three-way match, the mass distribution and driving use of P cards, electronic funds transfer, allows for those those spam type of frauds. So, but my experience is that successful frauds, perpetual frauds, generally take individuals from more than one function. So that could be either accounting and procurement and the supplier community and accounting. So it's important to think of the solutions of spanning the entire source to pay, procure to pay processes. Otherwise, I use the tongue-in-cheek reference of it's like whack-a-mole. You hit one down in one place and it'll pop up someplace else.
Wow, I didn't know there was a fraud persona, and it sounds like it's almost a team sport where people are working together. I mean, they obviously have to collaborate a lot of the time for some of the things I've read about. Amy, with your experience, you've seen a lot of processes across a lot of companies. Do you have an opinion on electronic versus manual processes for reducing or detecting fraud? Because some of this seems a bit intuitive, isn't it? Yeah, but
it is, and like Gerard said, there's a lot more than just technology. There's collaboration typically involved as well. But I personally am much more comfortable with digital rather than paper processes. There are a number of steps you can put in place. You can have access controls. You can segregate duties. You can set up and then pay the same supplier. Now you can have people collaborating to get around that, but typically it's going to take that extra step, right? validation, better vetting of suppliers with third-party sources. It's easier when you have some automated, you can use RPA to go out there and validate suppliers from various sources versus trying to do it manually where you may skip some steps. There's also more traceability. You can go back and in the best systems, you should be able to track who did what, which can start to show patterns, or when you do discover something, start to unravel what happened. And I also think there is, when we talk about what's going on in this current crisis, some of your processes can be more location independent. So, if you think of a company that had to suddenly work from home or switch locations or had some kind of a physical, shift, there are organizations that I'm hearing about where, they had to bring books home or things were on paper and they had to still go into the office, or, you may lower standards more during a crisis or remote work situation. And when things are in a secure system with a variety of controls, there are just a few extra steps to get around that, and it's easier to be agile in these kind of situations and adjust your processes without letting your guard down.
Yeah, I mean, it's definitely been a huge enabler with this lockdown situation globally. Companies who have automated all their processes are obviously at a huge advantage, and it's almost unthinkable that people haven't automated all their processes. We're in the year 2020 now, but obviously there are still a lot of people relying on the manual processes. So, Danny, that could be a good segue to start talking about technology. And, I noticed the term fraud analytics. Can you start to tell us how software like Apex Analytics can help people with all these challenges?
Yeah, sure. There's some, very specific things you can do to identify fraud. For example, we have a relationship with a consortium of banks that can validate the ownership of the bank account that's on your supplier record to make sure that the owner of the bank account matches the supplier's legal name and entity type and some things like that. But fraud analytics can go beyond that, because sometimes the indicators of fraud are more subtle than that. The fraudster is fairly sophisticated and isn't making major mistakes that might trigger a warning. And so you may have to evaluate a series of transactions or characteristics of the supplier, like the sequence of invoice numbers submitted over time, or maybe some things about the person's identity combined with the invoice transaction history. And so just as an example, Apex's fraud detect solution, it looks at 120 or more supplier and transaction characteristics that you might not normally consider, like whether the supplier's headquarters is in a P.O. box farm in Delaware, or is it a residential address, or in a trailer park, or at a prison. And then, do the invoice numbers, are they in sequence? Are they out of sequence? Do they follow Benford's law, which suggests that certain digits would be used more than others? It calculates a range of fraud flags, rolls them all up into a single composite fraud score. So a supplier that hasn't flipped an obvious fraud trigger, but has this accumulation of things that are sort of suspicious, they get reviewed, and the backup documentation around that supplier is provided to someone who can trigger further investigation. So the fraud analytics are all about analyzing a lot of data to rise up, to lift up the suppliers who are suspicious in some way or another. And it does that in a way that really humans wouldn't have time to address.
Gerard, you've obviously used fraud analytics and these sort of software. In your view, what is the size of the prize? I was reading one of Apex case studies that they found, $2.5 million in overpayments. I think someone earlier said there was a $40 million fraud that was found. So when you're looking at the ROI on, these kind of technologies, what sort of parameters, what sort of size of the prize are you looking at?
Well, I think you have a couple of buckets. And first off, I'd like to say that I don't know if I should be flattered or agitated by the fact that they didn't use a previous employers of mine case study where they actually found for me $5 million from a single supplier. So I guess that's a good thing, right? But you have a couple of different buckets here, one of which is overpayments that aren't necessarily fraud, and that's probably going to be a few percentiles of your total addressable spend. And as previously mentioned, you have upwards of 5% of your top line revenue being lost to potential fraud. And then you have those individual one-offs. I read a report not too long ago from one of the big four that said that over 43% of the responders to the survey had single instances above $10 million of fraud. So when you start adding up all these buckets, and depending on your level of maturity and, of course, the size and complexity of your company, the dollars can get inexorably large. So again, I go back to, an earlier comment with regard to, I don't care what business you're in or how complex your company is or how rigorous your controls are. To some extent, there is going to be some fraud, and it is always up into the millions of dollars for those of us who work in a large company.
Well, that's certainly significant, isn't it, for any business? Danny, it would seem from our conversation that validating and verifying bank account ownership for payments is really critical in the protection of fraud and overpayments. So what sort of processes can companies put in place to ensure they get this right?
Yeah, there are a few things they can do. The first thing you want to do is limit the number of pathways requesters can use to request bank account changes. So an obvious method that we talk about is putting in a supplier portal that is password protected and has multi-factor authentication and IP address logging and other sorts of controls to make sure you know that a bank account request is coming from a legitimate source and it's a source that you've interacted with before. Then verify the country that the bank account is in versus the bank account versus the country of the supplier. So you wouldn't want to make a payment to a Nigerian bank account for a U.S. supplier, for example. And then lastly, we'd recommend implementing the bank account ownership validation that's integrated with the banks so that the banks who are legally obligated to verify the owner of bank accounts against government-issued documents have them extend that responsibility to verifying that the bank account ownership is the same as your supplier. So with those controls, you can have about as tight a control on bank account ownership as possible.
A couple of the points you made there are really, reminded me of some conversations I've been having with our community over the last couple of months. And one is, someone I've done business with before. Well, a lot of companies are trying to onboard new suppliers as they pivot to, adjust to the lockdown. And the second is verification, because a lot of those verifications require you to ring a landline, don't they? And because people aren't at their desks, they're on mobiles or what have you. So, the very nature of this sort of pandemic is challenging those things. So we might just reopen the COVID conversation, Jared, and maybe if you share with us what's actually happening at Charles River right now, how you've had to pivot, and to ask you the question: have you been trying to onboard new suppliers, and are you having trouble with this sort of verification process?
So yeah, absolutely. Given labs is what we do, the PPE has been the first supply chain that's been disrupted. And we've had to go out there and identify new suppliers and cull the chaff from the wheat, if you will. So we've been bringing on new suppliers so that we can continue to have access to these business critical supplies that ensure us working every single day. But the longer this lasts, the more you're going to see different supply chains interrupted. For instance, the pork supply chain has recently been interrupted because of an outbreak in a factory. There are a number of different supply chains being interrupted just because of the fact that you can't get transcontinental air freight going from point A to point B, either due to lack of space or prohibitive costs. So there are many different things, there are many different ways that COVID can disrupt our supply chain, and I think we're only seeing the beginning of it, unfortunately.
Amy, are you seeing a lot of people trying to onboard and do what Jared just outlined? And in your view, why is the supplier onboarding process so important?
Well, we are, as Gerald said, there's been a number of new needs in the supply chain that procurement people have to accommodate, and that's just part of the reaction here. But I think for the broader question, why is it important? Part of our job in procurement and managing the supply base and getting value from the supply base is risk management. And we really need to ensure that we're monitoring and we're mitigating all kinds of risks. And in the case of onboarding, there's usually a number of different checks internally that need to be done. And I think even on a good day, even when we're not dealing with all of the internal and external and personal and professional challenges of COVID, there's a lot of inefficiencies still in that onboarding process. I spoke with a large service provider a couple of years ago, a consulting firm, outsourcing firm, that they had 12 different people with different checklists to review new vendors, and each one had their own, checks and their own reasons, and all of the questions they were asking made a lot of sense, but that's a completely inefficient process, right? You've got a lot of people testing or taking the time. It's not efficient, and it's also probably missing some gaps if you haven't matched it up, one list against the other. So we want to increase that efficiency, but we also don't want to let the guard down. And I think there are tools that streamline now across different questionnaires that, and even consolidate information across buying companies that can be an efficiency improvement, but also potentially give you another way to validate and to check some of this risk in the supply base as you're going through that onboarding process. And again, when we go back to doing this digitally with a process that's more traceable, less location dependent, less paper and phone dependent, it's more flexible when you run into a situation like this and you may need to accelerate things or do them remotely.
Danny, did you want to add to that and, share some of the risks that you see with onboarding new suppliers, now in this challenging time or any time?
Well, I think the main thing that you want to do in a time like this is get suppliers onboarded quickly without compromising your controls. And so that could mean, making sure that suppliers are actually approved, and that things like banking information are accurate. But you also want to make sure you know who you're doing business with. And so it's, government and regulatory bodies have regulations about who you can do business with. We're talking about potentially terrorists or sellers who have a history of selling fraudulent medicine or tax cheats. And so, first of all, you don't want to do business with them, but not doing business with them is also a legal obligation. You can get stiff penalties, jail time. So it's important that you do the appropriate due diligence before doing business with really any supplier or customer. And one of the challenges is keeping up with all of those regulations all over the world. And so it just becomes important to make sure that you're plugged in with a provider for your onboarding process or an advisor to your manual onboarding process that really can keep you up to date on all of those global violations. I mentioned the cost and potential fines. One example we've seen is that it's reported that over 35% of the companies that get fined for OFAC violations, so they're doing business with suppliers who are on the U.S. government watch list, 35% of them are faced with fines of $1 million or more. So the financial impacts of not onboarding suppliers properly can be kind of pretty big.
Wow, those are some big numbers. Amy, what have you seen companies do to accelerate the onboarding of suppliers?
Yeah, so I like to see when I talk to companies a process that's a bit more customized to the risks of the category you're buying for. Not every supplier needs to go through every check. And evaluating, which suppliers are touching confidential information, which will have people on site, which need to follow labor laws, for example, or, you can shorten the process in some ways for less risky buys. There are other things, though, that, you don't want to compromise. And Danny just gave some really good examples of, compliance, obviously AP, payment type checks that everyone should be submitted to through or subject to. So you do want to put the speed bumps in the process for that. But I think when you're onboarding a lot of suppliers, being a little discerning and having, shorter and faster tracks, you can use tools like a one-time supplier setup or P cards to expedite the process for some smaller non-recurring suppliers and really low risk categories. But I think you have to be very purposeful on where you use those and where you don't. Like I said, you can find, fraudsters can find their way around a variety of things. So I like the idea of whack-a-mole, focus on the end-to-end process and across various categories and look where the opportunities are. There's no one check or balance that's going to control everything.
Danny, we're coming to the top of the hour, and I've got a few more questions I want to ask everyone, but, we always like to make sure that our listeners get some actionable takeaways. So we've covered a lot of ground today. In summary, what are some of the top tips that you would give people for stopping fraud?
Yeah, so we have just a checklist of items we recommend. One is to use the supplier portal for change control and risk management, one that's secure and provides unique supplier journeys for the supplier types that present different sorts of risks or in different regions of the world. Closing stale purchase orders and vendor master records, those are ripe for internal fraudsters. Tighten your payment approval process. Look at supplier information versus employee records to look for potential fraud. Look for patterns and common fraud attributes, as we discussed. E-invoicing solutions. So if you can narrow the channel that invoices are received, that can help. Move to direct deposit instead of check payments. And then lastly, implement bank account ownership validation. That's a set of controls that we think are really useful and every company should be implementing.
Oh, fabulous. Thank you so much. Jared, is there anything you would like to add to that list?
Well, I think Amy and Danny were really definitive. I would like to build upon something that Amy said with regard to increase your diligence in the more risky purchases. So where you're doing business, specific countries around the world, that could impact the propensity for fraud. What it is you're actually buying or doing in that market can certainly impact the potential for fraud. And last but not least, the level of spend in the space. Like I said, if it's small one-off spend, maybe less diligence. But as the spend goes up, I would increase the diligence there. And while it hasn't been stated, increasing the frequency or creating an AP and contract compliance audit program, whether it's delivered internally or externally, but an ongoing audit program tells folks that you're watching, even if it's just the inside folks. So those are the two things I would add to what's been said already.
Yes, it's amazing how just having a process in a place and people knowing it's thorough can be deterrent enough. Look, Jared, I know this is a leading question, and of course Apex Analytics is our host today, but you obviously went out to the market looking for fraud detection software. What should our listeners be looking for in fraud detection software, and why did you choose Apex Analytics?
So I'll try to be brief. Initially, find a software company that's not a small startup and is financially stable. You want one that's going to be around, that can fund ongoing development of the product, and is not going to nickel and dime you for any ongoing releases of the product. You know, to make sure that the company's investing in that product. Make sure they know the space and they know it well. Do they have other lines of business in this space that add to their knowledge, or is this a just pure one-off where a bunch of really smart people created a software package and workflow in a vacuum? I would look for information, not just data, right? So the information has to be processable, reportable, get data dumps that you can manipulate it, and data that tells a story so that it can be actionable without necessarily just being a ton of lines of data. It needs to provide across the P2P life cycle, from insights from across the P2P life cycle, so from vendor setup all the way to invoice reconciliation, again, eliminating that whack-a-mole approach to the process. I'd love it to have it proactively identify fraudsters, again, based on where they're doing business, what type of business they're in, and of course, related to what is happening across the other customers of the software. So the more that software is being used, the more industry expertise that's being applied, the more there's a shared knowledge of who the fraudsters are. Going back to comparing the employee data to the payment data, of course, automated alerts and workflow, so that you can have this not only sit on top of your internal ERP, but have it work with your ERP at every step of the way. And last but not least, again, I go back to the reporting in that if it's just happening in the background and all you get is tactical alerts, yes, that does work, but being able to give you insights so you can run your business better and adjust your processes accordingly, I think is where the real value is. And like I said, I hope I didn't reiterate anything that was stated before.
No, that was a great list. Thank you. It's always great to learn from people who've already walked down the path, and I know our listeners will be very appreciative. Danny, I saw in preparation for today's discussion that Apex has been rated very highly by Spend Matters in their solution map, and I see you've been in that elusive top right-hand quadrant for a full 4 quarters. So we'd love to hear that, but why do you think Spend Matters rated you so well against its peers for the last 12 months?
Yeah, we're really, really pleased with that and proud, and kind of for 2 reasons. One is that we did really well with the Spend Matters analysts. You know, they do a deep dive RFI and then require you to demo anything that they think is challenging or exceptional, and then they do the ratings. And that was, pretty extensive experience. But the second part is that they query customers of all of the products and get ratings from them. And so we've done really well on both axes, really at the top of both. And they did a nice thing. They wrote an article called Apex Analytics, What Makes It Great? And they flagged up 3 key differentiators or reasons why they like the solution. And they are, 1, best-in-class supplier and financial information validation capabilities. So we, as a supplier, is onboarding, we validate every field that we've been able to find an external data source for to make sure it's accurate. So we have 650 integrated government, regulatory, and third-party data providers integrated into the process. Then number 2 was workflow configuration and rules engine. So our clients told us that, not only is the world complex, but the rules are changing all the time and their own internal policies are changing all the time. So we've built a workflow, a business rules engine that has 180,000 business rules in it that are standard out of the box. But they can be configured to a client's own needs. And in fact, we have clients who are making their own adjustments to business rules independently of us. So it gives them a lot of power. And then last, top performing risk monitoring and modeling capabilities, because we're tracking all the fraud flags we talked about earlier. We've got some AI-enabled news monitoring and the ability for really unlimited questions and questionnaires around compliance and performance and other activities that are built into the solution or can be customized for a client or configured to a client's specific needs. So those were the 3.
Wow, it sounds like you've got a lot of options to tailor this solution. Gerard, are those the reasons why you selected Apex? I mean, what do you think makes their offering different?
For me, what made the offering different was, of course, all those prerequisite functionalities, but the fact that it was developed by a firm that's been in this AP and contract audit space for years and had delivered in that space gave me the confidence that they know the space well, and this is built based on experience, not on interviewing folks in the space and delivering what's been asked, but more of here's what's needed.
Well, thank you, Gerard, and thank you to all of you. That was a fantastic, very informative discussion. So, which brings us to the end of our webinar today and our walk on the dark side. Thank you to the executive team from Apex Analytics. Our experts provided a fantastic overview of the very real risks that exist without strategic supply risk management. So if you'd like to listen to this webinar again or share it with your peers, we'll be making the on-demand available in the COVID-19 group on Procurious from tomorrow. And remember, we're trying to crowdsource confidence during this crisis. So if you need support, please ask a question on our discussion forum to keep the debate going. Thank you for taking the time to listen.